Are you considering long-term care insurance? Do you wonder, should I have it or should I not? How does that affect my retirement plan? Well, by the end of this video, you will gain clarity for your personal retirement plan and have action items to secure your retirement.
To learn more about securing your retirement and all the different elements you need to know, subscribe to our channel and hit the bell to be notified when we post a video every Monday. We have helped hundreds of our clients gain clarity and get on the path to a comfortable and happy retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to 138 episodes. That's crazy. Can you imagine?
That is crazy.
I mean, we started this, well over a year and a half ago, and it's just amazing what we've been able to talk to people about, the feedback we've gotten. Not only is it episode 138, but it is also the last episode of 2021. I think that's even bigger. 2021's gone.
It's just crazy how it has flown by, and all these episodes that we've been spinning out, every single week. And next thing you know, we're at the end of the year.
Yeah. So this particular episode is on the topic of long-term care. It's a big topic, and we're going to kind of take you through some thought processes on that. But we also want to make an announcement we are pretty excited about. When we started this podcast a year and a half ago, we came up with this idea that we were going to do an interview every single Monday, and we were going to do a retirement in action every single Wednesday. And we have just put out a tremendous amount of information. We've gotten great feedback. But we have polled our audience, and we've talked a lot about it. And a lot of people say, man, I love these. I'm just behind because I can't keep up with all the information coming out. So we've talked about different things that we can do for that, or how to be able to do that. And we realized that 2 episodes a week might be a little bit much, and people want to hear everything, but they get so far behind. And we almost feel like sometimes we might have to go back and repeat an episode just so that people get it back in their queue. And we know you can go back and look, and you can go back and get that information. But we thought, let's make it a little bit more streamlined. And so what we're going to do starting in 2022, so January 3rd, episode 139, we're going to have a new podcast come out every Monday. We are not going to have a Monday and a Wednesday. So every Monday, that podcast will come out. And we are going to still do interviews. We're still going to do our retirement in action, but we're only going to do interviews that we feel bring a tremendous amount of value. So instead of just trying to go out and find an interview and say, hey, well, it's kind of a fit, we're going to really be careful and be very, very picky about who we do interviews with. So only on information that we feel is going to add extreme value. Also, in addition to that, because we're going to this one episode, our retirement in actions, we're going to make sure that they themselves are really kind of going into those good questions and dealing with good topics that are current and things that we think can add value. We've gotten great feedback on all of the different podcast types, but we know that that's a lot for you to get 2 episodes a week. It's a lot to keep up with. During COVID, it wasn't that big of a deal because you're stuck at home anyway, or you're stuck in this scenario where you're not able to kind of have your normal routine, but we're getting out a little bit more. We're traveling a little bit more. So we feel like this is going to be a very, very good transition. So beginning January 3rd, we're going to be 1 episode a week, and we're going to try our best to deliver an extremely good informational podcast every single week. What do you think, Merce?
Yeah, I mean, I think we've talked a lot about it, and we've gotten a lot of really good feedback on the podcast. And the more and more, our biggest thing is we want to keep the quality coming. And sometimes, and you've heard the saying, quality is always better than quantity. And that's what we're striving for here. So we love doing this podcast for you guys. We've gotten so much feedback on some of the topics that we do. And we know that we are going to continue it for as long as we can.
All right, let's get on to our real topic today, which is long-term care. Long-term care is a topic that is something everybody feels like they need to talk about. But at the same token, everybody knows how expensive it is. And so there's a dilemma. And the dilemma could be for one person is, let's say you've got a good amount of assets. Should I self-insure? That's a question that we take the clients through. Another one is, what type of insurance should I get if I'm going to get insurance? Because there are different types of insurance for long-term care. And we want to kind of talk you through how those options look. But I think in my mind, the first thing I would want to do is to kind of understand what's the risk. And I'll say this statistic, and this has obviously changes, I think, the longer we live. But right now we know that there is a very high percentage of at least one of a couple. So you got two people, a very high percentage, and I'm talking, in that 80% range, that one of the couple will go into some form of long-term care. Now, it might not be very, very long. It might not be full-on critical type care, but for some period of time, I think the average is somewhere around 2 to 2.5 years on average. So Merce, could you kind of walk us through, just so we got some context here, if a person's looking at that, how we come up with the calculation and what that can look like?
Yeah. So like Raiden was saying, long-term care, let's just say insurance in general is somewhat of a personal decision. Yeah, there's a numbers aspect to it, but it's also this idea of transferring risk and how much risk do we want to transfer, and to really think about it. I mean, when we're talking about long-term care or buying life insurance or even buying your car insurance or your homeowner's insurance or an umbrella policy, it's all about saying, well, I don't want all of this to be on me if something does happen. I want to kind of prep myself or make sure that there is something in place that if something does happen, I don't have to cover all of it. And so with long-term care, we know it's expensive, but also we need to kind of take a look at what are the costs of actually, what if we are in this scenario of whether it's assisted living or if it's full-on nursing home care. What is the actual potential outlay that we may have if we don't have insurance? And then we get to, once we have an idea of what the cost is going to be, and no, we don't know when someone's going to go into long-term care. We don't know how long they're going to last in there, but we do have averages. We do get to work off of some of that. And so once you kind of get to know those numbers, then you can say, okay, well, let's evaluate, can I afford this on my own, or do I need to transfer some of that risk over to an insurance company? And then we work through, well, what's the process? How does that all work? What type of costs am I going to be paying? But the first is understanding some of the basic numbers. And so as far as nursing home and assisted care living, I pulled some numbers today, and this is from Genworth, a large insurance company, and they provide this for us every single year, and they update it. And they give us average monthly cost per state. I'll go ahead and tell you what the national average is, but we know how averages work. It can be all over the place depending on the numbers that are used to make that average. And so the national average today for 2021, nursing home care, and this is a monthly bill, a nursing home monthly cost is $8,517 a month. And if we're in an assisted living situation, that number is $4,051 a month. And so that is no small number. That is a number that can be very intimidating. And so we need to think through, hey, how are we going to afford this if we do have this situation? To give you some more specifics, because that is one big national average covering 50 states. A lot of you listening here are in North Carolina. We're recording in North Carolina, so it makes sense to know that number. The 2021 national or 2021 North Carolina nursing home average monthly stay is $8,060, and the assisted living is $3,800 a month. And then you've got places like California where you're expected to pay around $11,000 for nursing home care, $5,000 for assisted living. In Texas, it's a little bit lower, $6,000 and $3,000. And Pennsylvania, $10,000 and $4,000. So it's all over the place. But the moral of the story here is that it's very expensive. And so we have to kind of think it through and be prepared for it. One other number that I'm going to throw at you, because the numbers that I'm talking about are basically if you go in today in the year of 2021. What we know that we always have to deal with is the cost of insurance, the cost of facilities to be able to take care of us. And essentially what I'm getting to here is there's an inflation rate. Inflation in the world that we live in, and that is essentially a cost increase. So let's say you're a 60-year-old today and you're not worried about long-term care at all right now. You're still relatively young. You're barely getting into retirement. But you're thinking about it. Hey, this ran in my family, whatever it was that ran in my family, and they entered into it at whatever age. And you say, I just need to figure this out because I know I'm not going to go in today, but potentially what if I'm going in at 80? And so we need to kind of look at that number just once again based off of averages. So I said, well, if I'm 60 today and I plan on going in, no one plans on going in, but if let's say I do happen to go into one of those scenarios at the age of 80, the current cost of increase is 4.28% on an annual basis. So if I go in at age 80, and let me say that, I'll be in there for about 4 years in this long-term care type of situation. Well, some of those $8,000 numbers that I told you today have basically doubled 20 years from now. So 20 years to get you to 80, and then that 4% increase on an annual basis. Now we're looking at $16,000 a month to cover some long-term care costs. So from $8,000 to $16,000 a month. Now that number is even larger and even scarier. And if you take that on a monthly basis, so you're in there for 12 months, $16,000 a month, and then you take that over the next 4 years, well, that becomes a total cost of $830,000. I'm not telling you these numbers to scare you by any means, but this is just pure math. If you have this type of situation, it is expensive. It can be detrimental to a portfolio. It can affect your loved ones that do survive this type of situation. So again, this is why this conversation has become so big, because long-term care is a fact of the life that we live in. It's there. And so now we got to talk about, well, how do we cover it? How do we start to think about making these decisions, and what do we want to be thinking about? So Rayden, I'll let you get started on that.
Yeah. And Merce, how long is that average there to get us to the total long-term care cost? Is that 4 years?
That's 4 years.
All right. So 4 years, if you take that $16,000 a month, comes to an expense of about $830,000. If you take that and say, what if you go into a long-term care scenario for 4 years? $830,000. So now, again, go back to this scenario of what are my options? Well, one option is to self-insure. What that means is that you say, hey, I've got enough money that I know that I can fund that myself. I look at my numbers. I'm not going to spend that money. So in all essence, if I go into a long-term care, my children get a little bit less. So there's a couple of ways to think that through. One of those is, let's just go down this idea of the potential of self-funding. So what you could do, one option would be, is you could say, look, I'm going to take out today at age 60, $1 million life insurance policy that will go to my kids. And that way, if I have to use $1 million of my money for long-term care, if I actually do that, then I didn't take away from my kids. They're going to get funded through the life insurance. That's one. I kind of like spread the risk that way. But the other option is a person says, I want to go take out the traditional long-term care insurance, and I'm going to just go get it to cover that. A couple of things that people have problems with on that is that they go, what if I buy this traditional long-term care insurance and I don't need it? Then all those premiums, no one gets any benefit from. The other thing that we've seen a lot of recently is with the traditional long-term care insurance policies, the premiums going up. And honestly, going up massively. We've had clients coming in that their premium is doubling from what they thought what it was. It's doubling. And so a lot of people are not really into the traditional, let's just go get long-term care insurance for long-term care. There are some hybrid policies that you can look at. One hybrid is a policy that is an annuity and long-term care. It kind of looks like this. You put $100,000 into the annuity. You might, depending on your age, let's say have $300,000 of coverage toward long-term care. But if you don't need it, the money is still there in the annuity. If you were to die, it's going to earn some, it's going to earn some interest. If you died, then whatever that 100,000 has grown to is going to go to the kids. If though you need access to the money, you also have access. So that's one option. Another option is to go back to the life insurance, and it's a life insurance hybrid, and it has a little couple extra features. One, I can put a lump sum of money in that I have access to that's 100% liquid if I want it to be. It's going to earn, again, a nominal interest rate. Let's put that in that 2 to 4% range on my cash benefit. I have access to that money if I need it, but then I can actually have a long-term care benefit based on the death benefit that I can use for long-term care. But if I don't need the money and I don't need the long-term care, then my heirs are going to get the life insurance, which is going to be a multiplier of whatever I put in, and it gets to them tax-free. So that's a big benefit. You can also do it where you don't put a lump sum of money in, but you actually pay a premium. So you could say, okay, I know I'm paying a premium every month or year to fund this life insurance policy, but I know I'm not just throwing premium towards something that somebody's not going to get. Meaning somebody is either going to get the long-term care benefit or they're going to get the life insurance. So it's really optimal if you're paying that premium, because it might look bad at first. Like you say, what if I'm paying $12,000 or $15,000 a year of life insurance premium? And you're thinking, well, that's a lot. But in reality, if I'm going to leave money behind, it's actually the greatest way to leave money behind, because the beneficiaries get all of the death benefit 100% tax-free. Now, I know that we've laid a lot out here to you in a lot of different ways, but Merce, could you kind of just take a couple of minutes and help walk through how we would do this with somebody in a live situation, so they could see the numbers of all these different scenarios using our retirement analyzer?
Yeah, we actually did this the other day with someone, and the power of this is pretty good because it kind of gives you some direction on things you need to start considering. And if you've been listening to us for some time now, you know we put a lot of weight on what we call the retirement financial plan. And so very quickly, what that is basically saying, hey, here's where I am today at whatever age. Here's my goal of retirement. Here's the assets that I've accumulated. And then let's project it out and let's see, on a spending plan, how does this all work and how do things play out when I reach age 90, 95, 100, whatever you want to look at, to kind of say, does the plan work? Once we have this baseline plan set up, now we can run all kinds of what ifs and say, all right, well, specifically for this podcast, let's say, what if John goes into a long-term care scenario? And let's say it is at that age 80. And we can then take the numbers that I gave you at the beginning of the podcast and say, hey, here's what this potential expense is going to be if he goes into long-term care at age 80. And what it does, the software does, is really nice. It kind of shows you in one very clean picture. We approach age 80, and then all of a sudden we see this unfortunately massive outlay of dollars that we have to pay to the facility every single year. And that total, like I said earlier, ends up being $830,000 over a 4-year period. And what it's doing is it's withdrawing funds from your nest egg. And what it shows us very quickly is, hey, is it even possible to self-insure? And if it is possible to self-insure, what is going to be left over for the surviving spouse? Is there anything left over for the surviving spouse? Does the surviving spouse make it to a comfortable age 90, 95, 100, whatever you want to look at? And so what that does is it gives us the ability to have a really nice conversation, again, around how much risk are we willing to take in this type of scenario? This future massive outlay of trying to self-insure, or, hey, do we want to take a chunk of the money now and do something like Radon said? Do we want to put it towards a hybrid policy? Do we want to look at paying into a policy? And it starts just giving us an ability to have that conversation, because now we do see what the potential impact is of a long-term care scenario on our own individual situation, which is the biggest part of it. Sometimes you read articles and they always go off of these rules of thumb. You got to have this amount saved before you retire, or you got to have all these different things before you retire. What we're doing in our plans in every situation, it's all based off of your numbers, your goals, and your scenarios. And so the power to be able to put someone, and this is all technology, the power to be able to put someone into a long-term care scenario, put someone in a different situation, it lets us look at a very real picture as to what could happen in the future. And then from there sparks some really good conversations.
All right. Well, we hope this has at least given you something to think about. We know that there's probably questions you have. I would encourage you to do a couple of things. Number one, as you think through this, we have a blog written on this very topic. You can go to our website, pomwealth.net. Go to the blog page. You'll see the blog article. It just helps you review it. The number two thing, though, is is if you're thinking about this and you're thinking, man, I got questions, then if you look at the top right-hand side of the website, you'll see a button there that says complimentary phone conversation. You click on that, and Merce and our calendar comes up, and you can schedule a 15-minute phone conversation with us. We'll be glad to walk you through or answer some of your questions. And then if you decide, hey, I would like to actually look at my own illustration, my own retirement plan, we can talk to you about how to do that. But we hope this has been helpful. We look forward to spending 2022 with you and sharing and continuing to share with you great podcasts, great interviews, and great retirement in actions. That we think this is going to be a great year when it comes to being able just to be ready. You can't throw much at us after you've lived through 2020 and 2021 that we're not ready for. So thank you very much for listening this year. We will talk to you next year.
We hope this video has given you some confidence and clarity as you plan for a worry-free life in retirement. But what else do you need? We have created a complimentary video course called 3 Keys to Secure Your Retirement. This video walks you through step by step what you need to do to get ready for retirement. You can also check out our podcast called Secure Your Retirement. You can subscribe below.
For more retirement tips, watch this video. Create your retirement income plan. Also, click here to subscribe to our podcast, Secure Your Retirement. If you like this video, hit the like button and be sure to subscribe and share it with your friends.